Hello subscribers, today is Friday, November 12th, 2020, and this is a market recap for MasterChartsTrading.com. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. I want to get right to it. Very briefly, we're going to cover all of these topics. So we're going to cover stocks, some examples of semiconductor stocks I want to give you. Junk that looks kind of ominous as it trading range narrows, and Treasury bonds so far have failed to break out. Gold, I think, has entered a new bull market. This is a big deal. Natural gas, I think, may continue lower and has dropped as predicted, and Bitcoin is again at new record. This will most likely continue. If you're a subscriber, then you will also get two separate videos, and we're going to cover all of these stocks in those videos. All right, let's get right to it. So S&P 500 here. I'm always using my trading indicators. You can see them on this chart, this green, blue, red, and yellow line. You can find out more about them by going to the description of this video. So basically the way I trade is I put the indicators on the chart, I apply the indicators to the chart, and then I'm looking for a close above the blue support resistance line. So once the close has occurred, you can see it right there, we buy at this level, and we probably had a few more weeks. So this was week of 18th of May 2020. Probably had a few more weeks as late as maybe June of 2020 to buy. And then afterwards, you can see that it kind of just continued higher and higher and higher. So at this point, we are again at new all-time record highs, and we are trailing. So when the stock makes a new high, we advance our stop, move our stop higher and higher and higher, and we trail at this blue line itself. So if a few weeks ago, for example here, the week of 18th of October 2021, our stop was at around 4,044. Currently, our stop is at 4273 for S&P 500. You can very easily see how easy this chart is. Notice on this chart that there are no moving averages. There is also no volume. I don't believe volume is necessary for trading. Volume is good to know if you are, for example, want to find out if the stock is widely held or widely traded. But for trading itself, for purposes of trading itself, I do not believe we need volume. Although many people will argue with me and say that, for example, breakouts need to be on high volume. I don't think so. I didn't find it necessary in my trading. The results are about the same. You can have high volume breakouts, you can have low volume breakouts. We don't get paid in volume, we get paid in price. So, if the price was here at 2,900, 2,900 here, but the volume was low, but now the price is 4,600 here, but the volume is high, this means nothing. This only means that we made some money. But if we talk about volume, then okay, so who cares? Volume is high, volume is low. It really makes zero difference. Looking at S&P 500, again, there is really no way to predict where the top is going to be. This could continue for a while longer. We could pull back a little bit, but notice how small these pullbacks have been. This is like one of the deeper pullbacks right there from 30th of August. This was, 6% pullback. You see, that's nothing. A sizable pullback where I would be considering buying would be around, 11%. If we were to stop everything right now and move back towards where I would be considering buying, that's around 9% move, 10% move around the blue line. And around the blue line, I would be considering buying it. Dow Jones is very similar to S&P. Correlations are very high. So in other words, when S&P moves up, Dow Jones moves up as well. You can see that correlation for to Dow Jones, where I'm hovering, this is correlation of Dow Jones to S&P 500. It's huge. It's like 90%, and it's basically the same thing for all practical purposes. So we are treating it the same way. And if you bought Dow Jones back here in 2020, as late as possibly, July of 2020 right there, then you are in really great shape. Again, you trail at the blue line, blue support resistance line. So if here in October of this year, your stop was at around 32,000, now your stop is at around 33,800 right there, 33,800 right there, where I'm hovering. Will I buy Dow Jones right this instant? No. If I was to consider buying Dow Jones, I would want to see a pullback towards this blue line, which is around 6% down. If it pulls back that much, I will consider buying it. But right now, there is no point buying it. There is a great point holding it. So that's why we trail at the blue support resistance line. Looking at QQQ, the gain was even stronger. If you are able to get in back in May, April, maybe as late as April, May of 2020, that was the latest opportunity right there. I wouldn't be getting in up here, honestly, but some people do. I just don't really like, because to me this is a high risk entry. I like to see a pullback before I get in. So notice that NASDAQ moved 86% in our favor. And this is a NASDAQ 100 ETF, so 100 stocks from the NASDAQ exchange. That means that many stocks moved significantly more than 100%. In fact, I'll show you a couple that did just that in a few minutes. Big news, of course, last week, right there on the 1st of November, a week of 1st of November, we saw a breakout for small caps, IWM, at new all-time records. We made another all-time record high this week. So again, this is very good news because it shows broad participation. Looking at this chart in particular, we can do an estimate of how high this continuation of this move might be. So this is called a measured move estimate. So if the move from this level right there where I'm hovering from June and as late as maybe September of 2020, see right there, you were able to get in here on week of 21st of September, week of 21st of September 2020. If you are able to get in there, that's a 55% move in your favor. So usually when we estimate this type of moves, we can say that this type of move will be duplicated on the upside. Will it happen? We'll see. But it is a very bullish chart. It makes sense, to own stocks. It makes sense to trail higher. So again, for this small caps ETF, IWM, if our stop on the week of October, 25th of October, right there, was at around 2,000, then now our stop is at 218. You see, so this is how we make money. We advance our stop. We could take profits. One of the pretty good places to take profits is when the stock moves higher, and then you can kind of see this thin green line here where I'm hovering. So right there where I'm hovering on the week of 12th of July 2021, this was a great place to take profits. You can see the stock moved up and then it closed below this green line. To me, this is a great place to take profits. It's a very substantial move, and it's a reasonable place because it's also possible that it will continue lower, so we need to preserve our profits, and this is a sizable profit. Some people never do that. Some people just get in and stay in, and sometimes this is a good strategy, especially in strong bull markets, as we're having right this instant. And here's a few examples. Advanced micro devices. So again, this is a weekly chart. I did not trade this particular chart, but you can clearly visualize it, right? I'm going to mark where good opportunities to buy occurred. So a dip below the blue line and then a close above it. So there it is, week of 6th of April. Wonderful opportunity right there to get in, and then another several opportunities and kind of trading sideways. So you were able to get in multiple weeks here from March into as late as June of 2021 this year. So multiple opportunities to get in. Then another several opportunities right there, week of August 16th, and then several opportunities right there. So this is basically what I do. See how easy it is? You do not really need to know much. You do not need volume. Once again, this is basically what I do. I look at the chart. Once the stock closes above my blue support resistance line, I buy it there. I put my stop at the yellow line. Once my target is reached, and the target is around the green line, you can kind of see it, it's a little bit thin. So once the green line is touched, I move my stop to entry. At that point, I really cannot lose. So let's say you were able to get in back in April of 2020. Let's see how much it moved. It moved 230%. So it moved from $47 to $147. And I just pointed this out that NASDAQ 100, the entire ETF, moved over 85% in the same time period. So multiple stocks within it moved significantly higher than that. So again, this is the way I trade. Very easy, straightforward. And then you can do the same thing once you sign up. If you have a TradingView account, you can have the same indicators on your chart. TradingView accounts are free. My indicators are not. So do sign up. XLNX, I keep forgetting how to pronounce it. Xilinx, I think that's how you pronounce it. So again, generally the same principle, and once again, it's very clear. This is how I trade. This is, you can probably already say, you can already kind of guess where I'm gonna enter. So I'm going to enter where I'm gonna enter. Where do you think I'm gonna enter? I'm gonna enter right there. You see, there's the breakout. This is the initial breakout on the week of July of 2020. You trail higher. Another opportunity right there, week of 8th of March 2021. Multiple opportunities here, so you can have several entries. Another right there, opportunity in 14th of June. So if your target has not been reached, we just sit and wait. Once your target is reached, you need to move your stop. So this target was reached right there on 28th of June. So if you were able to get in here, target was reached, you should probably advance your stop and make sure you don't lose the money. You can't know the future, because what if after this July 16th, I'm going to zoom in a little bit, what if you were able to get in right there on June 14th, week of June 14th, you reached your target next week, and then it dropped. So I would have been stopped out right there. But then again, I would have re-entered right there. And this trade actually I would have been still in right there. So once again, how much did you make if you were able to get in July of 2020 and you did nothing, like many investors do? Again, this is 111% move. So if you were able to get in with long-term leap options, then you're basically set. So this is how I trade. Very straightforward. Again, do not need volume, do not need any moving averages, do not need any other indicators. In my opinion, this is all I really am using, and I think you can do the same thing. Simplify your trading. The simpler things are, the better. Right, let's move on to junk bonds. So why are junk bonds important? So this is junk high yield bonds. So junk bonds, generally speaking, have high degree of correlation Correlation and causation. Do not confuse correlation and causation. This is like I once saw a Halloween pumpkin carved that way. Correlation means that they happen to do somewhat similar thing. Is it because of that? Is the causation? Is it because of that they're doing it? No, we do not know why. We're just saying that it does that. So correlations are high. Generally speaking, again, correlation is high between junk bonds, high yield bonds, and S&P 500. On rare occasions, you can see rare occasions, we're dipping into negative territory. In fact, this is happening as we speak right now. So we're seeing negative correlation. So as stocks are making new records, junk debt is not. Junk debt is kind of trading sideways to even down slightly. And then, additionally, you can again see how wide the trading range was. So trading range is the distance, in my opinion, trading range is the distance between these two lines, the yellow and the green. It was 17 points as in March of this year. It is now barely 2 points. Do you see? So this is a very dangerous period. I'm going to show it on daily charts. Junk bonds right there. And I'm going to project my indicators into the future on daily charts. So projection doesn't yet work on weekly. I'll fix it eventually. But on daily chart, it works really fine. So projecting into the future, there's really not much different. We're pretty much as tight as we're going to get, maybe slightly tighter. So being very granular here, we are currently below this blue support resistance line. So technically speaking, we are set up to buy. Once it closes above it, so for example right there, this was an opportunity right there, and you actually reached your target. So you bought, let's say November 4th, you reached your target November 8th, you got stopped out November 10th. Okay, that makes sense, right? Now we're set up for another opportunity to buy. However, we haven't yet closed above this blue line, blue support resistance line, and additionally, because of the tightness of its trading range, we can easily get to bearish levels. Bearish levels are not far away. Bearish levels are right there at the yellow line. We're 1% away from bearish levels, you see. Whereas very recently, until very recently, we were significantly further away from bearish levels. We're 3% away. So this is a narrow trading range. And if junk debt enters a bear market because of this high correlation, generally speaking, there is a good high correlation. When stocks go up, junk debt goes up. When when stocks go down, junk debt also goes down. So there is a good chance we're seeing some sort of a prelude to a turnaround for stocks. So this is kind of like a warning sign. We need to be really watching here. This junk debt, I'm hoping that we're gonna continue higher and make a new record. But we've been trading sideways for junk debt basically since, February, basically the entire year. So we need to be very careful here and see where we're gonna get. If we continue lower, then I would be kind of reluctant to buy stocks again, to continue buying stocks. So I would rather have both junk debt and stocks going higher. And if junk debt is not going higher, I am more worried. Okay. And again, with this narrow trading range, I'm even more worried now. So let's be on the lookout for any negative price action. Treasury bonds, so TLT Treasury bonds. Again, this is a weekly chart. So looking at the weekly chart, we have entered a bear market, I think, right there in January of this year. you were able to get in on the downside if you know what you're doing, if you can short. Made a huge amount of money here with a nice drop. Couple more opportunities right there, for example, to short in July, and another opportunity to short right there in October, but the selling was basically inexistent and we moved higher. So right now we're watching very closely to see where this where this Treasury bond action will go. Not yet we did not yet see a breakout to the upside. So and additionally, this candle, this weekly candle from this week just doesn't look good. It looks like a shooting star candlestick. So it is quite likely we're actually going to continue lower. So for now, we're still in a bear market for treasuries. By extension, treasury note yield, so this is, for example, TNX, 10-year treasury, or we can do TYX. It actually makes very little difference. We're still kind of moving higher, although you can see that TYX itself kind of already made a break to the downside. So let's see where this gets us. I'm more excuse me. I trust the TLT, the Treasury Bond ETF, more than anything else. So I'm gonna look at this chart and see where we're gonna get. So for now, I'm not seeing a breakout yet. I want to wait and see where we get from here. So let's wait and see with treasuries. Okay, so moving on to Forex universe. Here's dollar index DXY. So once again, this one broke out right there, week of July 19th, and we had several opportunities. Now we're at 52-week highs. So dollar. Why am I talking about dollar? This is dollar currency index, which is composed of various other currencies such as euro, Japanese yen, and Swiss franc, etc. We need to look at correlation again. So I want to, I cannot change it for some reason. But let me try something. Yeah, so I wasn't able to change the correlation here for some reason, but I wanted to show you that normally correlation to what do you call it, to gold. So I'm gonna maybe try another XAU USD. So I'm gonna see. Yeah, there we go. Okay, so this is a correlation to gold. So normally, let me see here. Correlation between gold and dollar is negative, and it makes sense because dollar is priced, or rather because gold is priced in dollars. So this is correlation between between gold and dollar. You can see it's 100%, and this is a correlation between dollar and gold, and it's normally negative. Okay, so as dollar gets more expensive, gold gets cheaper. It's absolutely normal correlation. So right this instant, what we're seeing is both gold and dollar moving higher. So gold, this is dollar, it's moving higher. Gold, XAU USD, is also moving higher. Not a normal correlation. Usually it's the other way around. Usually as gold moves higher, dollar moves lower. But we're seeing now both gold and dollar move higher. So this is a little bit weird, and as maybe you have heard, we're seeing, you know, inflationary pressures all around us for various things like food and rent and cars and God knows what, pretty much everything. So until now, it really wasn't showing up too much in the price of gold itself. But I think this week is a big deal because now we're seeing actual breakout for gold. So I'm going to show it on your daily chart as well, right there, XAU USD. There's the actual breakout. We were shorting gold. It was somewhat successful, but not terribly. You can see that there was really no follow-through with all those downward-facing arrows, especially the last one, which completely did not work out. But and additionally, now you can see a pretty clear breakout. Projecting the action to the future, maybe we'll see a slight pullback, but overall, gold may have entered the bull market. In fact, I'm now looking at various gold related, and here's one right there that's going to be for the subscribers. That's silver Wheaton, used to be silver Wheaton, but also known as Wheaton precious metals, right there where I'm hovering. So looks like gold is indeed breaking into the bull market. This is showing that we are possibly now going to see like a true inflation. A true inflation is kind of like a loss of trust, and if there is loss of trust in currencies, we'll see appreciation of precious metals. It's like a normal relationship. However, right this instant, it's not as clear because dollar is also appreciating versus other currencies. So, okay, this is important to understand. This dollar index is versus other currencies. So, we're buying gold at this point. This is big deal in my opinion. This is a big deal. Here's gold miners, same general principle. Again, we were selling them short, and right now they seem to be approaching bullish levels. Bullish levels are not that far off. I'm going to show it to you on daily charts. Gold miners are approaching bullish levels. Bullish levels at around $35. This is nothing for. This is 3%. You see, projecting into the future really doesn't tell us much. But I'm looking now to buy gold miners basically. So this is something to consider. We could see a huge opportunity in various gold miners, if I'm correct here. Okay, natural gas, big news, of course. Everybody is completely freaked out going into the winter. We're going to see huge prices for natural gas. I said this is, this especially this candle right there. This is a weekly candle of week of 4th of October. I'm like, this is clearly a shooting star candlestick. Next week we had a bearish engulfing. Next week we had a follow through to the downside. Enormous candle, another bearish engulfing, by the way. So bearish engulfing happens when a previous candle, real body, this is a real body, this green little part, gets engulfed by a big red candle. This is bearish engulfing. Bearish engulfing is not good. We're gonna most likely continue lower from here. Has natural gas entered the bear market? It's possible. For now, I'm still thinking it's gonna be in the bull market, but we need to see like a consolidation. So it's called a consolidation through price or consolidation through time. So either way, unwinding of this overbought conditions through price or through time. So we're seeing a significant pullback from $6.40, what is that, like almost $6.50 here, and now already at $4.79. You see, that's a pretty significant drop. So, my subscribers, again, we were able to get in on the upside from relatively low risk entries. So you can see up arrows, actual alerts to my subscribers. We were able to get in here, 142% move. I would be out of any of these trades if I had them. In fact, I would be out this week. So that's still an 80% move. If you were able to get out at the top here, congratulations, but it's really impossible to know exactly where the top is, so don't even bother. So natural gas prices most likely are gonna at least trade sideways. I don't see them going higher at this point. Bitcoin, finally, we're getting to the end. So again, record run. We were buying them, actual alerts right there. We were buying them as early as May of this year, at around 7, 8, 9,000 here. You can see it went to 64,000, which is some obscene amount. So let's see how much it actually appreciated since last opportunity, since we bought it back here. That's 549% move. But if you were not able to get in there, you were still able to get in recently, here around August or even September of this year. That's still a very sizable move. It's a 42% move. So again, congratulations you for you're able to get in. All right, that's it for this week's recap. Head over to MasterChartsTrading.com. That's one word, MasterChartsTrading.com. Click on products and sign up for one of the products. So the indicators, trading indicators, these lines in the chart, these lines are available for TradingView.com. You do not need a paid TradingView account. You just need a free TradingView account. Once you sign up on my site, it's $30. It's nothing basically. I will open the door for you on TradingView.com. You can have the same lines on your chart. If you want indicators and newsletters, so I send out alerts about various securities that we trade. So Elite newsletter contains all kinds of ETFs, large cap stocks, forex, commodities, and cryptocurrencies. And Speculator newsletter contains all kinds of speculative stocks. So for example, this week I will cover all of these securities. You can see there's quite a bit, and there are common securities like Twitter, Walgreens, etc. And for speculative stocks, I'm looking mostly for breakout stocks, so new uptrends basically. Ultimate Bundle adds a stock screener where you can actually look for stocks that are breaking out. As for example, there's things like AMD. So there's AMD, Advanced Micro Devices. That's you can find stock that just did that. So it dipped below the blue support resistance line here on September 20th and then closed above it on 22nd of September. It would have come up on your scanner. So you can have the same results delivered to your email inbox. That's it for this week recap. Again, if you have any questions, let me know. Thanks for watching. Have another great trading week. Bye-bye.